Hey everyone, it is Evan here from the Trade Risk on Tuesday, March 19th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we are jumping in with the charts today. The market technicals dashboard that we usually look at first is down right now. The actual dashboard itself is down. I'd expect it to be back up anytime. I expect it to be back up in future videos and on Friday's video, but at this point we cannot get that data to you. So we're going to jump right into the charts here with the S&P 500. This is the weekly time frame cash market. This is where we like to start our analysis, and we can see here on the weekly time frame that we are just slightly up on the week, up 2.7 points in the S&P 500. But notice what this weekly candle is looking like. We got a bit of a reversal here on Tuesday where markets tried to push higher, reversed and closed near their session lows. So we get a little bit of this potential outside week brewing here where the market tried to push up and it is initially getting rejected. So one thing that we want to pay attention to into the close of this week is just how this weekly bar finishes. Do we actually see more selling into the close of this week, into Wednesday, Thursday, Friday, and do we actually, fall back into last week's range? Or is this just sort of another head fake, another kind of quick rug pull in the context of a market that continues to grind higher? Now, we do have the day 2 FOMC meeting will be out tomorrow. Minutes will be out, so we'll get some latest insights on Fed policy, which might help move the market here tomorrow with some headlines. And I think that's it into the end of the week for major headlines anyway. I'm sure the trade debacle and all that fun stuff will continue to continue to flood our eyes from media. Otherwise, this is what we could look at into the end of the week is Fed, and then this weekly close here. And this 2,800 level, we talked about how, kind of exciting and how optimistic this market was last week, where we had bulls stepping in, buying up this shallow 3-4% dip and pushing us to new highs and continuing over 2,800. We'll see if that, if the mood comes out of there, if the air comes out of the balloon, so to speak, this week, if we continue to sell off and close towards lows. But for me, technical levels that I'm paying attention to continue to be 2,800. It's what we finally closed above last week. We're still above it, and we want to stay above it if we're going to see this market hold up as bullish and optimistic as possible. So 2,800, that's what I'll be watching, and then 2,872 on the upside. That's really kind of the highs back from January of 2018, and then where the market really started to break down in October. So let's go down to the daily chart, and we'll switch over to, we're going to stick with the S&P 500 just because of that ex-dividend on the SPY ETF right now. But if we look here at the daily chart and we throw a couple more horizontal support resistance levels to pay attention to, 2,800, that's what we just talked about here. We're about 1%, not even, yeah, about 1% above 2,800 right now. Given the fast move it had last week, it wouldn't be surprising, would not be the end of the world to see us follow through tomorrow, down and test this 2,800 level, find some buyers there, chop around, and then potentially mull higher over the next couple of weeks. That to me would seem like a perfectly reasonable scenario, and a constructive one, to say the least. So a little bit of a kind of a shakeout here, a little bit of a 2-day move to the downside, totally reasonable. But 2,800, that's generally speaking where I want to see buyers show back up to show some commitment in this market. And really, I'd like to see just acceptance of a break above 2,800. So I'd like to see the ranges continue to compress, volatility continue to stay low, and just see this market trend and grind above 2,800. That is the most optimistic scenario. Not saying it has to happen, but that is the ideal bullish scenario. If we start to lose 2,800, then I become a little more neutral in the short term, and I would start to look to last week's lows around 2,740, 2,730 as a level to start to really pay attention to, because that was our upper level support now to really pay attention to. So 2,800, that's the breakout level to hold. 2,730, 2,740, that's what I'd be looking at for longer term support. Otherwise, 2,872, as long as these bulls can hold in in there, hold us above 2800. Seems like the market does want to continue to grind higher here, but I'll let the market be the judge of that, and we'll see how this week finishes up. If we go to the IWM next, you can see here this one is now kind of the underperformer of the bunch right now. The IWM still hasn't taken out or even retested the highs it made a couple of weeks ago. It got as high as about a 50-60% retracement, and it's kind of just moving sideways here. Again, not the end of the world. This is not doomsday. This doesn't mean that, you know, everything else has to come and crumble down, but we just want to pay attention to it because we do have some nice levels kind of carved out here that the market's been adhering to, and the IWM has been the leader over the past many months. So if this starts to roll over, we do want to pay attention to that as a potential spillover effect into the other indices. Again, it's that dance between rotation versus some type of more meaningful contagion, you know, with an IWM breaking down and leading to other markets, or is it just some healthy rotation into what is currently now big cap tech or mega cap tech at this point, really, which continues to act quite well. And you can see here, did manage to still close 0.34% positive, certainly off its highs, but well above, you know, all recent trading days, and holding up in this trend nice and strong, like it wants to continue higher here. So the bid does remain, and the rotation game is playing into the Qs right now, into the NASDAQ, and that's where we're seeing it, the strength, and that's where we're going to want to, you know, take our Qs from as well, is just to see if this hot spot in the market right now can continue to keep and prop everything else up, as perhaps the IWM takes its breath here. So that's the market that we're looking at here. Still bulls mostly in control. We got a short-term intraday reversal today. We'll see if anything comes of it. It could certainly mark the top for sure. It's possible. Anything is. So we do want to take things one day at a time and measure them. But for now, bulls remain in control of short intermediate term trends. So that is the market environment. Let's take a look at some of the other majors here. We'll go to TLT next, which is down just slightly on the week, but mostly just trading within last week's range. If we go down to the daily chart here, you can see it's still moving sideways in between this, you know, call it 119 to 122 and change. That's where it's been for basically all of 2019, 122.50 or so. This is where multi-year resistance is at this point. This is a big level for TLT. It's consolidating right underneath it, so we're going to still want to keep this on close watch, as it's put in a good amount of time moving sideways underneath a very key long-term level. So let's pay attention to that to see how this ultimately resolves. GLD next. We'll go to GLD here, and you can see it was up slightly. It is up slightly here on the week. Inside week brewing so far. Again, buyers trying to put in some type of higher low here and put in something of some convincing structure. Still looks a little bit messy here. It did break this trend a couple of weeks ago, so it's slightly in the penalty box right now, but bulls, like I say, are trying to hold this up, put in that higher low, and recover prices. So we'll see if they can continue to do that for the third week in a row. If we go to silver, very similar situation here. Broke trend a couple of weeks ago, retested this $14 breakout level from late 2018, and now it's starting to, or attempting to, kind of push higher here and recover some of the breakdown damage from just a couple of weeks ago. Last but not least, if we go to oil, oil here continues to push higher, continues to trend higher in the short term. If we look at the weekly chart, it's up 0.66%, getting back towards some of prior more significant horizontal levels of support, up close around $13. And we're still 60-70 cents away from there, which is about 5% for USO because it is a lower priced ETF. But it does seem to be marching higher on its way, coming into a little bit of the spot where it kind of bounced around back in November of 2018, but short-term buyers remain in control, MACD in positive territory, so we should expect the trend to move higher there, grind higher until proven otherwise. And last but not least, it's natural gas, which continues to really kind of sleep around here, around this 2450 area, moving sideways here, taking its time, fueling up, consolidating on very low volume, MACD hovering right around 0. So very much a wait and see type of market here, waiting for some more enthusiasm, a breakout, a range expansion, something here to signal that this market is picking up some momentum. Right now, just moving sideways, and we'll see which way it ultimately resolves. So that is it. That is what I have for the midweek video. Hopefully, guys are off to a good start for the week trading. As always, thank you so much for tuning in and watching. You can subscribe on YouTube or follow us on thetraderist.com. Have a great rest of the day, and see you in the next video update.